you definitely need to play Johny Appleseed, throw out the seeds and meet people.
Welcome back, investor, to another episode of the Passive Income Adventures, where we have Jeff Greenberg today. Jeff and I have had a history and some funny stories about the small community of commercial investing and how important it is to have a great network of people, because there aren't a lot of us in this business, and you meet the same people doing deals over and over and over again. And if you are not the kind of person that people are going to want to do deals over and over and over again with, it comes out very quickly because it's a small community. And so we talk a lot about the abundance mindset, whether you're a passive investor or an active operator of commercial real estate, how to basically merge those two visions. So like Jeff and I both started out where we were a little bit more active. I mean, he did a couple of passive investments first with the intention of becoming active, which is the same thing I did, because we were looking to make more cash more quickly. I always say I was looking for a full-time income on a part-time schedule. But then now that we're kind of to that point where we've hit critical mass on our equity or on our cash flow, we're able to slow down and have more money in the game, working harder for us so that we can work less and less as the money works more and more. And so Jeff and I talk about our coincidences on the same deal that I tried to buy, that he was selling, that was basically the biggest turning point in my career. And it was a huge turning point for him as well, because we both realized with that deal, when he was running it, he realized, I don't want to keep doing this. And when I was going into running it, thinking, I don't want to do this, because I had run some deals before and I knew what I was getting myself into at that point. And when that deal failed, I was relieved. I was sad because it was a great deal and I really wanted to be able to further my business, but being forced to take a step back and think to myself, what am I doing? Why am I doing this? And realigning with my goals was one of the most valuable things that happened to me. So Jeff and I share that story, what he learned from it, what I learned from it, and just talking more about how to get your money to work harder for you, how to find great operators that you can trust to take care of your money, because, you know, Jeff and I don't want to operate the deal. And so how do we find great operators to operate things for us, either our own cash or our investors' cash? Some great lessons in here for the passive investor to figure out how to do it better, how to find more opportunities, and how to get the best returns on your money possible. And join us now for Jeff Greenberg. Thank you for coming to the show today, Jeff. It's a real pleasure to sit down and talk to you. I know we met in Miami at a conference, and I would love to talk more about the networking and the importance of meeting people at conferences, and having you on my podcast and just talking about your history with multifamily investing, with student family housing, where you are today and how you got there and where you're moving in the future. So thanks for being on the show.
Well, I want to thank you very much. I'm very excited about having a conversation with you. We had a great one in Miami, and I'm excited to be able to share with your listeners.
How about you just get us started by giving us a little bit about your elevator pitch, what you're basically working on right now, and then tell us the story of how you got there, like your origin story. Like, just pretend you're Wonder Woman and tell us all about yourself.
I mean, I've been syndicating multifamily and student housing properties for the past 12 years. I call myself now a recovering syndicator because
Me too.
I've moved from the syndication and into the equity raising. And I have several funds, and I'm sure we could talk about that. But starting out, like most people, investing passively in some large deals to kind of get my feet wet and learn about it, and then jumped in with both feet and started syndicating multifamily properties.
I have a very similar start where it's like I started out passively investing as a private lender and just basically saying, hey, I want to jump into commercial real estate, and thinking that the only option I had was to go out and buy big commercial buildings. And I wasn't thinking about it from an investor standpoint, because even though I had been a passive investor as a private lender, I didn't really think about that I should just be putting my money into deals. Instead, I thought, oh, I should go start a business and jump in and do this. And there are a couple of reasons I did that. But can you tell us about kind of your start where you made that transition from passive investor to active syndicator, and now you're kind of moving back towards the passive investor path?
Well, the reason I originally went in as a passive investor, I knew I wanted to be active and I wanted to learn a little bit more about it. So I did invest in a deal with a guru that I had met and figured, okay, this would be a good way to learn the passive investment side of it, so I knew what to do with my investors when I become active. The goal always was to leverage other people's money, since I was in the middle of a divorce at the time, and I knew that I didn't have that much money that I was able to invest, and I wanted to leverage other people's money. So that's kind of where we got started. And then we bought a 20-unit property, and we did syndicate it. We raised money, and that was one of the hardest things I've done in a long time, was raising, our first raise for our first deal. And then we went on from there.
Yeah, I felt like in the same boat. The first raise that I did, I actually didn't do it because I was reaching out to, I hardly knew anybody. And I was just reaching out to people. And I had this little 12 unit that I wanted to purchase in my husband's hometown. And I wasn't really sure if I had run my numbers correctly. I didn't know what I was doing. And so I was trying to find somebody, a true joint venture partner to come and help me. We had most of the money. I just need a little bit of money and some experience. And the deal ended up going nowhere because I just didn't have enough people to call, enough people to ask. I just didn't know enough people in my network at that point. And so that deal kind of fell through because of that. So how did you end up getting that first deal done? Especially the first deal is the hardest because the network is so small.
Well, several things. One, we got the loan we got, it was with a very small bank, and the lender was very impressed that both myself and my partner were invested passively in commercial real estate.
Mm.
We didn't think that anybody was going to be impressed with that because we made it clear we were passive investors, but they felt that we had the attitude that they were looking for. And then as far as the raise, it was interesting because we had to raise $350,000. That was it. And we raised about half each. My partner raised hers pretty much from people that she had known, either fellow employees, bosses, or friends. It was people that she knew before real estate. All of my money came from people that I had met after I was in real estate. People that came to my meetup that I had been running for a while, that I'd met at seminars, that had heard me talk on a podcast or whatever, but it was all from networking. So I thought it was very interesting that it was so clear that, I got it from the network and then she got it from her past.
Yeah, they just can't get anything done in this business without a good network. I've heard a lot of people complain at the beginning when they're going to a lot of RIA meetings or meetup clubs or online meetings, even paying money to go to paid masterminds, paid conferences, and they're just super frustrated because they're not seeing any action come out of that. And they're not really feeling the magic of the network. What would you say to the beginner investor who's out there networking, doing what they need to do, and they're just not really quite sure if this is going anywhere?
You definitely need to play Johny Appleseed and throw out the seeds and meet people. One of my investors was a guy that was working with me on one of my meetups, but he didn't invest with me, until 3 years after we had met. So all of a sudden I get people that, jump in an investment that, I met years ago. So it isn't an instantaneous thing. It's building that relationship and that trust. And you never know, if they're watching you or not and hearing what you're doing. I mean, if you're putting out newsletters and stuff and hearing your successes and hearing what you're doing, you don't know, who may just pop in and say, hey, I'm ready. So it's planting the seeds, building relationships, letting people know what you're doing. And sometimes it takes time.
Yeah, I think one thing that I really struggled with at the beginning was feeling like if I could just put my cash into a deal, because of that first private lending experience that I had, I was recognizing like the power of the passive investment, but I didn't really know anybody. I put my cash in with an operator that was referred to me, but I was really, really nervous. I didn't really know him. I hadn't done anything with him before. And then when that money was starting to come back to me, I didn't know what to do with it because he was the only person I knew. And by the time I started to have that loan come back to me, I realized that my rate of return on private lending was much lower than I needed it to be in order to retire early. I knew I had to put it in some higher performing assets, but I didn't really know anybody who was investing in the stuff that I needed to be investing in. As a private lender, finding somebody in like a RIA group or a meeting worked great because a lot of people were flipping houses. But when I started saying, hey, I need to get a lot higher returns, I need to partner up on stuff, I need to be with commercial real estate, I didn't know anybody. I didn't know where to go. And I had an investor reach out to me recently, like a prospective investor with our first discovery call. And he said, hey, I'm not an accredited investor. And as I was learning how to invest in commercial real estate, I realized that I can't invest in most of the deals that I find because they're for accredited only. But I learned that if I reach out to operators and introduce myself and tell them about my financial situation, then I can get on your notification list to see your private deals that you can offer to unaccredited investors. And I was just blown away by this because I never heard anybody say that as an investor. We say it as operators all the time, as syndicators, but I'd never heard an investor get on that. And so he just started making the phone calls. He just started finding people who had deals, and you call up and he'd say, hey, do you ever do private deals or 506B deals? Can I get on your list? And he was out there networking just because he knew he didn't have a lot of opportunities because he wasn't accredited. So what do you say to the passive investor who is looking to network and find opportunities? Because you feel like if you have money, the deals come to you, but that's just not the case.
Well, I think that that guy was doing a great job as far as reaching out. I do get a lot of people that come to me and say, "Hey, how do I find good quality deal sponsors?" Because as you and I know, the key to a successful deal is the deal sponsor. We're always looking for good quality deal sponsors. And that's a difficult thing. And as you're saying, the networking part of it, going to these different events and meeting people and talking to them. And, this leads into kind of what I'm doing now as far as with my fund. I have investors that are looking for good quality deal sponsors. And that's what I'm looking for as well. I use my network to find those great sponsors. And then I offer them to those people that are coming into my fund. And we invest that way. But I get that question all the time. And I do have a handout we could talk about later that talks about what questions to ask. Because even if you find the deal sponsors, what questions are you supposed to ask them to make sure that you're getting into the best quality deal that you can?
Let's shift gears here into your previous life in your day job, 9 to 5. What were you doing at that time? And how did you find that those skills that you were developing for that career that you had lending themselves towards your new career as a multifamily syndicator and now fund manager?
I was a network engineer. And, I've always been good with numbers and good with spreadsheets. So the analysis part of it was probably my strongest point. And, when I received somebody else's underwriting sheet, I ended up modifying it to bring in the things that I wanted and to understand it. So I did understand the numbers and I did the underwriting. So I was able to do a lot of underwriting of deals when we were looking for the acquisitions. My partner probably was better at, some of the broker relationships and bringing the opportunities in, but my skill was mostly the underwriting and understanding the numbers.
My husband's in IT, and I found that a lot of IT guys are in the multifamily commercial real estate space now. And I think the reason is because one, you are very analytical. You're able to put data into some sort of a manageable set that you can make decisions based on that. Another thing that I've noticed is that we just tend to live in tech towns where there are a lot of opportunities and a lot of people investing in these kind of deals. And so we have more people naturally coming into our network. I've had people reach out to me from when we lived in Austin that I had no idea were commercial investors and multifamily investors until I started getting into it. People I've known for 20 years will reach out and say, "Yeah, I have 12 buildings, or I bought 18 hotels, or I've syndicated this." I had no idea that they did that because at the time they were not talking to me about it. But once I started getting into it, we were in another tech town as an IT guy and basically networking with a lot of people. I'm actually really surprised that the town that you live in has such an impact on your ability to invest because you're just coming across great deals and people who are doing great deals in these places where they value people like you who are analytical and understand the tech side of things and have great jobs and have a little bit of extra money to invest in projects. Have you found that to be the case with you?
Well, I found that it's important to put yourself in situations where you're going to be exposed to those kind of people. I'm in Los Angeles. Well, it's a pretty big community, but you go to meetings, you go to events where you're going to be able to meet those kind of people and talk to those. So, as a passive investor, deal sponsors are always looking for passive investors. Now, they may or may not want to do a 506B. The 506B is the one that allows non accredited. But when I started the syndicating, there was no 506B. There was only a 506. And
Mm-hmm.
the 506 was open to non-accredited investors. It was later on that the 506C came out, which limited you to the only accredited investors. But the thing is you have to build a relationship. And that was the whole thing is I was going out building relationships with people so that they would be eligible to be in my deals. Otherwise, you can't advertise on a 506B and you have to establish a significant relationship. The whole thing is going and establishing those relationships with those sponsors.
It's kind of funny the SEC requires us to be establishing that relationship, but at the same time, that's just best business practice. That's just best practice if you're going to invest with somebody is to understand who they are, what their business plan is, that relationship that some people are, oh, so hard. That's the way you're going to do more business anyway. It's almost like the SEC is just saying, hey, we got you. Go form some relationships and then you can do some cool stuff.
I totally agree with you. And when the 506C came out and people were saying, oh, cool, we can advertise. Well, Are people really going to just jump in and start investing with you just because you're advertising? They're still going to want to build up that relationship. The only thing this 506C allowed you to do is to advertise first, and then you could go and establish the relationship. The 506B, you needed to establish the relationship before you could really tell them anything about the deal. So that was what made it more difficult. Is so you just went around establishing relationships or meeting people, and then when an opportunity came up, then you could go in and show it to them. So it made it a little bit backwards.
Yeah, but that's still the best way to do it, I think, is making those relationships first and then sharing the stuff. And I think the reason that we had so many people in our lives who were doing this kind of thing back in the day is there was no 506C back then. So I didn't see them advertising on their social media. But at the same time, it's like I wasn't asking the right questions. I wasn't putting myself, when I saw them and we were hanging out, we're talking about kids and dogs and football, and we were not talking about work and business. We had two different types of careers and they weren't talking to me about it. I think they just assumed we didn't have any money. And I wasn't talking to them about it because I didn't know. They hadn't brought it up. I hadn't brought it up. I just wasn't putting myself in the right situations to be meeting the kind of people who could really help us build wealth. And those were some huge missed opportunities for us back in the day. Because if we had even just known this was a thing back when we were younger, we might have been able to set a goal like, hey, someday we want to get our first 50 grand together to put into a syndication or a private placement. And we just missed out and missed out and missed out and missed out because those relationships were not happening. And so I think that's the real takeaway from this is get out there, network, form relationships, and you never know what's going to come out of it. It might take a while, but something will eventually come out of the network if it's big enough, somebody somewhere.
And that's a very interesting point that you bring up. I think you find that your wealthy people are probably spending a lot more time talking about finances and investments and opportunities than more of the working, because that's what they're always doing, is looking for the next deal, looking for a new opportunity. And the only way they're going to do that is to talk to each other. I mean, I can remember on a bike ride, I stopped off at a Starbucks to get a drink, and I'm sitting at the table and there's some people talking away, and they're talking about franchise and they're talking about this business and that business. And they looked like they were very wealthy. You find that they're going to be spending a lot more time figuring out how to get their money to work for them rather than working for their money.
That's a great point because now I've overheard so many of those conversations between my neighbors, people at Starbucks, and I'm more able to introduce myself or jump in and have something to talk about. Whereas before, like I said, they were probably just assuming I just wanted to talk about kids and dogs rather than about finances because I didn't ever talk about that. I was just on the be debt free route and really hadn't thought much beyond that. Expanding my exposure has really changed my attitude and the people that I hang out with because we have similar goals. I wanted to ask about the deal that broke Jeff and Emma and how that really changed the trajectory of both of our lives and both of our businesses. So let me set up the story here and you can kind of tell it from your perspective that we had a 200 plus unit building in Central Texas that we were going to purchase. And I was purchasing it from a group that my partner was in. We own a building together in Idaho. And he said, hey, we have this great building that we're just getting ready to sell. Do you want to take a look at it before we list it? And I said, hey, sure. So we started looking at it. It was a good deal. We started putting our team together. And we had just bitten off more than we could chew because I felt like the equity raise that we needed to do, the amount of investors we needed to bring in, we just weren't able to bring in the money. And then when we started running into problems with some of our lenders, we thought, maybe one or the other we could deal with, but both of these things together, it just makes it too risky. And we're going to have to pull out. And you were in that selling group. And I remember when we met in Miami, I didn't realize at the time, until we got deep into the deal, who else was on that owner's team other than my partner. And it was almost funny when we started talking about the deal from the point of view that, hey, I pulled out of this deal. We lost our earnest money. We lost our legal fees, some application fees. And I walked away from that just very dejected and wondering, like, what am I even doing in this industry? Like, why did I want to buy this gigantic trophy type of a 200 plus unit building when I don't even want to run it? This was like a 3 to 5 year commitment that we were making to our investors. Well, not that I had any investors. I was trying real hard. And I just realized, like, even if we were able to raise the cash for this, and even if we were able to close on this deal, like, I don't want to run this. I actually don't like the day-to-day management. And so it caused me to back up and go into this introspective mode where I spent a lot of time thinking, networking, talking to people, and just really realigning myself with my goals, which was a passive income lifestyle. It wasn't how to run a giant syndication company lifestyle. And so I really had to get back in touch with what brought me into this industry in the first place, which was early retirement, so that we could then go on to the next phase of our lives and figure out what that was going to look like. And having this building really was a huge boulder in the way of those goals and that progress. So from my point of view, it was a huge turning point because I switched over to more raising capital from others. Like you said, finding great operators, putting people together in the same room, and the whole lifestyle marketing where it's like, hey, look, like we're doing it. You want to do it? Like, here's, watch us do this in real time. And for you, you said that you had kind of a similar moment where you realized that maybe this wasn't the right thing for you to be doing either. And it was that same deal. So can you tell us more about that?
Yeah, I mean, I was the seller on that deal, so it was interesting. But my thing was more of on the operation end of it, where you say you didn't want to get into the operation. Well, I had brought on board a fabulous lady that was doing my asset management. We brought her on the GP team, and she was asset managing and running the show. And she also brought in a great management company that we're really very happy with. They brought us through some extremely trying times. I mean,
Yeah.
when we first took it over, we went from 85% occupied to 66% occupied. And then as we were bringing it back up, COVID hit, and we were fighting to keep the occupancy up and keeping the revenues up, and it was a very difficult process. The person just was awesome in the way she performed and took every hit and kept finding solutions, and it ended up being an extremely successful deal at the end when we finally did sell it. But I enjoyed the process of having her doing all the asset management. Now, I could have continued on and rebuilt my company and had other people come in and, as asset management, but I decided my path was more towards raising equity. I decided I would rather just be on the equity side and not really have to worry about the operation side, because even if I had a team, the buck still would be stopping with me. I was the head GP. I was the main guy. And so it was mainly my responsibility, even if I had teammates doing a lot of the work. And I decided, I don't need that. We weren't great at the acquisition part of it as far as finding the deals.
Mm-hmm.
So I said, okay, well, let's find some people that are great at finding the deals and great at operating the properties. And maybe they're not as good at bringing up the equity, or maybe they're getting into bigger deals and they need more equity, which there's always plenty of people out there. And so I decided that was the path I wanted to go on. And that's, why I'm going on this path now, where I'm raising money from investors, helping them get into good quality deals. And I'm using a lot of the profits that I made from that deal to invest alongside of my investors. So I invest alongside of my investors on all of my deals. And the thing is, if I didn't start bringing people along, I would be investing passively myself, and I would have to do the due diligence. I would have to do all the work anyway to get the good quality deal sponsors and the good quality deals. Well, why shouldn't I bring other people along with me, leverage that time I'm spending doing that due diligence and helping other people as well? And of course, I'm leveraging other people's money, so I'm making a little bit on that as far as, for bringing people in. So it works out great that I'm able to still passively invest, but help other people passively invest as well.
What's funny about that opportunity is that after we let it go and you and I met in person for the first time at a conference, I was the next night sitting next to the conference organizer at a dinner, and I asked him what he was up to, and he said, "Oh, we're buying this building such and such size and in the same city in Texas." And I was like, "Wait a second, are you buying that from Jeff Greenberg's group?" He said, "Yeah, we're buying the building." So he ended up taking it over, and I just remember telling him, like, you are a great operator. You have a really good business. You have a really good system for running these large buildings. And he was also really great at the acquisition side and negotiating a deal that worked as a win-win for everybody involved. And I said, well, you know what? Let me get on your notification list so that the next deal that you get, because I know you're going to operate it right, so that I can invest in it. And if anybody at the time, my new investing club wants to jump in, we can find great operators. So that's what we do now, is find people who really have a passion for operating large syndication businesses, having their finger on all the details, and we bring our cash into those deals. And it sounds like that deal was the same thing that kind of made that turning point for you. So I don't look at it in my term as a failure. Of course you don't, because it ended up being a good deal for you in the long run. but as a pivot point to really zeroing in on what specialty we want to niche down into.
Absolutely. I mean, there's nothing wrong with pivoting and going different directions. You don't want to chase every shiny object and be
Mm-hmm.
jumping around all different things, but there's nothing wrong with taking a pivot. I mean, I think my 12 years of syndicating, shows that I'm not jumping around to shiny objects. There's things I like better. I would much rather be working with investors than to actually go into the details of worrying about the ins and outs of operations.
Exactly. And I think that drilling down into what it is that we really like about what it is that we're doing is the key to specializing. And if you really want to specialize hard, you have to have a bigger team. And to have a bigger team, you have to have a bigger deal. And I think that's why commercial real estate has been so good to me over the last couple of years, is because I've really been able to niche hard into just doing exactly what it is that I like doing. And I don't have to worry about running the whole show or wearing the DIY solopreneur hat. And I think a lot of people get into that trap, even as a passive investor, because they're not working with a group of people. They're just a lone guy looking at the pitch deck from the operator. They're not really sure what they're looking at. And so being able to get out there and network and figure these things out, it's really key to success no matter which side of the deal you're on: operator, fund manager, passive investor. We all are needing to do the same things to get these deals off the ground. And so networking with groups of like-minded people, it will advance our knowledge exponentially beyond where we were even just a couple of years ago.
Absolutely. And one of the points that you and I were talking a little bit about before we started recording was the importance of time. What is our priorities? What is important to us? And that, running deals, being the main GP is all encompassing. I have a lot more control over my time as far as what deals I want to get into and when we're doing a raise. And time is so valuable to me. I'm a lot older than you, I'm sure. And, now the priority is spending time with my grandkids. I want to spend time with my kids and my grandkids, and we're going skiing next weekend. And, we're talking about a trip to Japan next year. That is so much more important to me than, other things. Money is only worth something, what you do with it and, what it brings you. Not the money itself, but the value of the money is if it buys you time. That's the importance to me.
Let's dive into that a little bit more, because one of the other things we were talking about before we started recording was this adventure that my family is going on and how we're going to be able to leverage that to spend more time together, do something crazy, do something fun that takes a lot of time. You have to be passive income lifestyle or early retirement in order to go on a long time length of an adventure, rather than trying to pack everything into a weekend before you need to be back at work on Monday morning. Tell me more about what that looks like for you, because for my kids, they're a little bit younger. I don't have any grandkids yet. We're anxiously awaiting for that to finally happen. But being able to take them on this trip and show them the public lands that we have and show them all of the nature's amazing thing out there, and being able to find people along the way who could use some help. I think that's what I love about the hiking and the trail culture, is that we're always reaching out and trying to help people, even though we're not going to get anything from it monetarily. It's just this beautiful kind of service-minded community, and I really want to expose my kids to that, and I can, because of the passive income lifestyle that we're leading. So what does that look like in your future? Kind of take us to that moment where you're like, hey, I got to make a change. I got to do something different. And what is it that drives you into that passive income lifestyle?
Well, as far as, getting into real estate, I realized, like I said, I was in the middle of the divorce, and I saw, the house that we had built up, was going to be disappear in the divorce, and my retirement money was limited. So that's why I got into real estate in the first place. And, mainly for my retirement, I wanted to make sure that I was going to be an asset to my kids down the road, not a liability. And so that's really what got me into it. Now I keep going because I still want to be able to do things. I want to add to the value to my family. That's so important, spending time with them and doing things with them. And so that's my driving force, because I could quit right now and I could go and sit back and garden or build a playhouse in the kids' backyard. Things that I've been doing. I built a sauna last summer, so I could be doing those, but I'm still doing those. I'm
Yeah.
doing those in between my work that I'm doing as a passive investor. I'm not sure if I missed your question or not, but that was kind of my thoughts.
Let's take a minute to talk about your bucket list item. What is next for you on your passive income journey? What next adventure are you planning on taking, whether it's professionally or personally?
Well, on the professional side, I do have a 506B fund, and my goal right now on that fund is to get it up to $5 million in the fund. Once that fund is up to $5 million, I could take my sophisticated investors and bring them into 506C deals. I could take them into accredited investor only deals because the entity becomes accredited. That's one of the things. My 506B, or excuse me, C fund, I want to build that up. I want to build that up to about $100 million as far as invested. But that's mainly to help out other investors as well as to continue to my fund. Oh, back on the 506B, one of the reasons I formed that was I invested for my grandkids a while back, and they got returns on their investment, and I can't invest them in a 506C, but I have the money that they made from the last deal. They were actually in the Amarillo deal. Their profit is going into these other deals, and they're in the fund where they can invest in other opportunities.
Let's look at that a little bit deeper because you mentioned, hey, I could quit now and build playhouses and garden, even though we do still get to do a lot of that stuff and work. I like to work part time and then play part time. And so it sounds like you're in a little bit of the same boat. But if you could quit right now, what is it that drives you to building that fund to $100 million? You mentioned that you want to help other investors, especially people in your close friends and family network. So what is it that keeps you going? Because it's still hard. It's still challenging and it's still really time consuming. So what reward are you really driven by to continue to help investors find these great deals that maybe they wouldn't know about otherwise?
Well, I mean, the investors, I mean, I love working with investors. I love working with people, and I love, being able to help them and have them complain, that they're paying too much taxes because, they've made too much money. But even though we could help them with that as well, with the cost side, I still want to do more for my family, and I also want to, be able to give to my community as far as different programs that are out there in my local community that are helping, people with handicaps and different things. I think the more value I am to other people, the more money I bring in, I'm able to give more, and I can do more for others. That's just very satisfying. It's very rewarding to be able to help people out. I come from a background of teaching. I did work for a while, at a private school. I was a teacher, and I still enjoy teaching people. It's so rewarding to see benefit from something that you taught them or something you told them. And I've done as well, and it's very rewarding when someone is successful. So that to me is something you can't buy.
That's something I hear over and over again. We make the joke like go sit on a beach in Mexico. I don't actually know anybody doing that. Maybe if I was on a beach in Mexico, I might meet a few beach bums who were just doing that full time. But most of the people that I meet in this community are talking about spending more time with their family and giving back to their communities. That's what drives us. And when I was on a beach in Mexico with my 19-year-old daughter, I had taken to her an entrepreneur mastermind, and we got all done and we're flying home. And she said, those are the nicest people I've ever met in my entire life. And she said, I feel like I've really bought into the narrative that wealthy people are greedy and only in it to find out what they can get out of it. And I thought they're just nice to me because they want to get something from me. She says, but I'm 19. I don't have any skills. I don't have any money. I don't really have any value for them, but they were so helpful helping me to identify my goals. She says, because I have no real value monetarily or skill wise or wisdom wise, they were just so interested in helping me figure out all my goals and where I'm going in life and just asking me lots of questions. And they really gave to me a lot more than I was able to give to them. And that was a formative experience for her. And that's really what I found in this new network that I have over the last few years of commercial real estate is the genuine of people who have made wealth and who are living a passive income lifestyle to be able to then go and give back for their families and just for people in their community. They didn't know who my daughter was. They'd never met her before. Some of them may never see her again, but their genuine willingness and desire to help people, it just shines through. And you definitely have been able to hit on that yourself. So can you tell us a little bit more about how that plays into your future plans?
I just enjoy, sharing. It's just very rewarding when someone's success started with something that you did or said, and that's one of the things I love about this business is the people that we meet, at the different events, are very friendly, very giving. They're so willing to give you information. There's the abundance mindset. And that's what's wonderful is having that abundance mindset, not the backstabbing and worrying about, okay, if I teach you how to do this, you're going to go steal a deal from me or something. That's not the way it is. I mean, I ended up selling the property to a friend that I met in a mastermind. And we joke every time, or we talk about it every time we see it, or with you that tried and didn't get it. There's other properties where I've been beat out by somebody that I know, and I'm happy for their success. So it's a great business where you don't, for the most part, don't have people that are willing to stab you in the back and are very happy when you're successful. I'm happy when other people are able to do other projects, and I think, okay, I said, okay, maybe next time I need to work with them or something. Let's see if there's a way we can work together. And I work with a lot of my friends, and that's fantastic.
I've made friends with the people that I work with. The supportive, positive attitude, I've never seen anything like it before in any other industry that I've worked in. And not that we didn't have a spirit of collaboration in previous jobs. I think that teamwork and all of those values are very important no matter what industry you're in. But there's something about the investor community where there's enough to go around for everyone, and everybody's out there investing money, looking to help other people invest their money. And that's not to say that that everybody in there is moral and upstanding. Obviously that there are red flags and things we need to watch out for to protect ourselves, because there are people who are going to come into a community like that and prey on that positive attitude and that spirit of collaboration. So it's tough to maybe make sure that we're finding the right people to invest with. So in your fund, when you're asking investors to invest with you and when you're looking for operators to invest with, how do you make sure that you're with the right group of people?
I do my own research on the group, and I talk to the group, and I work, I go and I see their business. I go and I want to see their track record. But, as you and I know, the track record for the last 10 years, it didn't take much to be extremely successful.
We're all geniuses.
That's what I tell everybody. Anybody that sold a property in the last few years probably was a genius, because they did well. So it goes beyond that. I want to know about them. The people that I'm investing with right now, I've known, for the most part, I've known them for years. Either I've been in masterminds with them, I've spent a lot of time talking to them at conferences or whatever it is, but it takes a while to get to know them. Now, I do have questions I do ask them. I want to learn more about them. And then finally, I'll go on to the actual deal after I get comfortable with them. But I've got to be comfortable with them and feel that we're on the same track, and that if something happens, because things do happen, that they're going to take the appropriate steps and make sure that they put the investors first. Extremely important that the investors come first, and that we're protecting investors' money before we're worried about making money. The first thing is protecting money. You're protecting the investors' money. Then let's talk about, how you're going to make money and how much money we're going to make. But I'm afraid, for the most part, investors jump in and say, oh, how much are the returns going to be? Well, I don't think that's the right question. What are you doing to safeguard the deal first? What are you doing to safeguard my capital? That's what I want to know first. Then if I'm comfortable with that, now we could go on and talk about how you're going to make me rich.
I also think the business plan is a huge thing to be asking about, because any business is going to succeed more by serving the client, serving the people, not just the investors, but serving the people who are renting from that office or that apartment building. And figuring out how service oriented their business plan is tells me a lot about them, because even though a service oriented business is going to be financially the most successful, somehow people still forget that if they're in it for the money and they're not talking about those kinds of things. So that service-oriented business plan, to me, is a huge opportunity that we have to do good and give back to our communities. But it's also one of those ones that I ask people, because it helps me figure out what's important to them, what drives them, and how well they're going to serve the tenants who live in the property.
No, you're absolutely right. It is a service business, And, one of the most rewarding things that I did in this business was when I took over a student housing property that was foreclosed on, and we put about $500,000 into this property. It was 36 units, and we put $500,000 in to fix it up, to clean it up. And then I interviewed a lot of the students afterwards. There were students that brought me to tears when they told me, we were doing this for our marketing, but when they would say, how happy they were with what we had done, that we made the property safer, we got rid of the riffraff. And one young lady said to me that, my last question was always, if you could talk to the owner, what would you say? Because they didn't know that I was the owner. And she would say, I want to thank you for providing a place that I could bring my mother to, that I could show my mother where I was living. And that brings tears to my eyes even now.
Yeah.
That this because it was a low economic area, and she was able to show her mom and be proud of the room and the unit that she was in. So one of the most rewarding things, in this business is building that community, and you're helping people out.
That's more of that abundance mindset, creating a win for the owners, a win for the residents, a win for the investors, just a win for the community, wins all around. There's enough to go around, and that abundance mindset has really blessed my life. I know that it has also really blessed yours. So let's wrap up by telling people how they can get a hold of you. And I always ask, more importantly, why should they get a hold of you?
You can get a hold of me at jeff@synergetic.com, SYNERGEICIG.com. And the reason is, I like to talk to people about passive investment. A lot of people want to start as a passive investor and go into the GP side and then being the main GP. And I totally understand that. I've basically gone the opposite direction.
Me too.
Well, I actually started with passive. Then the first, I was the main GP with my partner. And then now I'm more on the passive side. But there's a lot of people that want to learn, and I think it's great. It's a learning process, and then you could decide what direction you want to go, as you get into it. And those people that are more interested in passively investing, I have some opportunities, or I'll have some opportunities coming up that we could talk about. And another thing is if you have a self-directed IRA and you're an active investor, you can't invest that in your own deals. So I have invested my solo 401k, which is similar to your self-directed IRA. I have invested that in other people's deals because I cannot put it into my deals where I have control. So I'm always interested in talking to those people as well that, are actively in the business. And I do have a handout, a little ebook for your investors to ask a deal sponsor if you want to passively invest. And you could get that at sigcre.com/sponsor. Questions you should be asking a deal sponsor before you go in as a passive investor. And if you're an active investor, it's good questions to be prepared to answer from your investors that gives you a clue on what kind of things that they should be looking for and that you could help them understand.
Yeah, making sure you're out in front of what's important to the business, your partners, your investors, everybody, and being on top of that and making sure that you're out there to serve people. Yeah, great tips there. So be sure to reach out to Jeff after the show. We want to be in your network. We want you to be in our network. Don't feel shy about reaching out after the show. That's why we put these shows together, is to connect with you so that we can help one another and experience more abundance as we work on these projects together. So thank you for joining us, and we'll see you on our next episode.
Thank you very much for having me.
Thanks, Jeff. I could have just kept talking to Jeff all afternoon. I know when we were at that conference together in Miami, we were not in the hall listening to the speakers. We were out in the corridor networking with all of the other investors, because at a certain point you realize that whatever that speaker has to say, you can buy the video afterwards. You are here to network with real life people and deepen those relationships, because the better you know somebody and the more you know that they're capable of and the more that they've accomplished, the more likely you are to be able to invest with them. We're not talking about small amounts of cash here with most of these private placement deals. $50,000 is a typical minimum, and that takes a lot of commitment and a lot of confidence to be able to place that kind of money with an operator so that they can take your money and bring it back to you later with some friends. And because it's so important, it's really important to spend that time networking and really getting to know people. I hope to bring you a little taste of that in these podcast interviews so that you can get to know me better, so that you can get to know our speaker better. But the only way that we're going to get to know you better is if you reach out to us after the show. Be sure to reach out to Jeff at Synergetic Investments and also to me at highrise.group. I have some investing opportunities there that you can check out, an accountability challenge if you'd like to sign up to spend some time with me working on your goals and making sure that you are focusing on the most important things first, prioritizing your passive income lifestyle, and making sure that the things that you're doing now are going to give you the most bang for your buck later. If you'd like to schedule some time for a free call with me, that's on there as well. And I'm really looking forward to reaching out and getting to know you better. Thank you so much for listening, and we will catch you all on our next episode of Passive Income Adventures.